Hey, it's Ryan Reynolds here from Mint Mobile. Now, I was looking for fun ways to tell you that Mint's offer of unlimited premium wireless for $15 a month is back. So I thought it would be fun if we made $15 bills. But it turns out that's very illegal. So there goes my big idea for the commercial. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Craving your next action-packed adventure? Audible delivers thrills of every kind on your command. Like Project Hail Mary by Andy Weir, where a lone astronaut must save humanity from extinction. Narrated with stunning intensity by Ray Porter. From electrifying suspense and daring quests to spine-tingling horror and romance in far-off realms, unleash your adventurous side with gripping titles that'll keep you guessing. Discover exclusive Audible originals, hotly anticipated new releases, and must-listen bestsellers that hook you from the first minute. Because Audible knows there's no greater thrill than the one that speaks to you. Discover what lies beyond the edge of your seat. Start your free 30-day trial at audible.com/WonderyUS. That's audible.com/WonderyUS.
Man, what a fascinating career Robert Rosenkranz has had. Multi-billionaire, has basically been involved in every part of the finance industry and really American industry. And he wrote a book, The Stoic Capitalist. And what I really like about this, he's not just being philosophical about Stoicism. And I like those books too. And I like seeing the historical examples about Stoicism and stuff. But he shows from an early point in his career how he actively used the principles of Stoicism to have great success. And he's written about it in the book, The Stoic Capitalist. And we talk about how even at a young age, Stoicism and the principles of Stoicism were so important to him. And he explains it. So really great talking to Robert, a real pleasure, kind of an American icon. And again, author of the book, The Stoic Capitalist.
This isn't your average business podcast, and he's not your average host. This is the James Altucher Show.
Robert Rosenkranz, welcome to the podcast. And we're going to talk about your very vast and varied career, as well as your recent book, The Stoic Capitalist, Advice for the Exceptionally Ambitious.
James, it's a pleasure to be here. Thank you.
You know, I've read a lot about Stoicism. You mentioned Ryan Holiday in your book. Ryan's been on the podcast like 10 times. You know, I'm hoping my listeners are very familiar with Stoicism, but I've never read a book quite like yours where basically you, over the course of essentially a 50 or 60-year career, you apply so many of these principles to building so many successful businesses. But I'm curious, what's one point where you were really just at your, maybe the worst moment or something wasn't working and Stoicism, thinking in those terms really helped you?
Well, probably one of the most stressful early things in my career was the very first deal we did when I went into business on my own. Was we bought a company that was the largest manufacturer of record album covers. And shortly after that, Sony released the Walkman, and suddenly people didn't want vinyl records anymore. They wanted cassettes. And we were under a great deal of pressure from the banks to put up additional equity in a business that whose earning power was substantially diminished. And it was an incredibly stressful situation for me. Because it was my very first deal. I didn't want to throw good money after bad, but I didn't want to stiff the banks either. And what I tried to do in that case was apply a kind of a stoic detachment and just step back and figure out, is there a way that the most important interests of all the parties could be satisfied? And I came up with a solution of basically selling the business back to the people that we bought it from. They reinvested, I think, about 12% of the money that they had gotten. We got 80% of our money back, and the banks got a bunch of new equity into the deal. Nobody was very happy, but it worked and the situation was resolved. And it was really giving myself the distance from what had been a very emotionally intense situation to come up with what I thought was a fairly rational situation, but a very tricky three-part negotiation.
Well, and a lot of times and you talk about this in the book, it's very easy to imagine that the worst case scenario has already become a reality. And sometimes people, I think, pride themselves on assuming the worst case scenario and, trying to dig themselves out of this mental and emotional hole after that. But as you point out, and as again, Ryan Holiday's written a book, it's the obstacle is the way. So in what sense was this obstacle, was this potential failure an opportunity for you?
Well, I would say it was, can't exactly say it was an opportunity, but it did resolve itself in a way that kept our reputation intact, kept most of our money intact, and we were able to move on to the next situation. I think the one takeaway, though, that I mentioned in the book is to not judge your decisions by the way they turned out necessarily, but by whether you correctly factored in the information that was available at the time. So even though this was a miserable story, I didn't really beat up on myself because I felt that the Sony Walkman was simply unforeseeable. I mean, I thought I got a very good deal based on the information that was available to me at the time it was made, and I was not going to beat myself up over the outcome. But more broadly, I would say the catastrophizing of outcomes is a cognitive distortion that can lead to pretty bad real-world decisions. And part of the reason I felt that this book maybe was new in the Stoic pantheon of literature is that it's not about coping. It is about succeeding at a large scale. And that was sort of what I thought would be its original contribution. The fear, I mean, the very first story in the book is about a decision I made to risk 100% of my liquid net worth in a quite highly levered situation where a 10% loss of the firm's capital would have wiped me out. There's obvious fear in making that kind of commitment. But the way I was able to regulate that emotion of fear was to think realistically about what that bad outcome would look like. And I felt, even if I lost 100% of my liquid net worth, I still had some illiquid assets that would turn into cash at some point. And the job I was leaving was a job that I could probably recreate at another firm. And that didn't seem so bad. The catastrophe is living under a bridge and not having your family go hungry. And that's just, yes, that might be a worst case, but it's not a worst realistic case. Or worst case thinking is really not helpful in making good, rational decisions.
Right, like worst case thinking would have told you not to make that decision. Even if it was a 1% chance you're wiping out your family, a lot of people just wouldn't take that risk. I don't know if I would take that risk, to be honest. But you were able to do this more rational thinking that, hey, it could happen, but you sort of looked at it from an expected value point of view. Like the high probability chance is that you survive this and actually even become incredibly wealthy as a result. And just to describe what this situation was, you were a partner at Oppenheimer. You were making good money. You were on the top of the food chain in Wall Street terms. But with Joe Mailman, who was a successful billionaire type of guy, he offered you an opportunity to start a private equity firm, but he didn't quite like the usual terms, and you made an alternative that gave you intense skin in the game without him having intense skin in the game.
Yeah, that's exactly right. I mean, this was the early days of leveraged buyouts, but the standard fee structure was pretty much the same. The guy doing the work gets a 20% carried interest, which is a free shot at the profits. And Joe just felt that did not align interests very well, that, if I swung for the fences to hit a home run, that was great for me. But if I struck out, the costs were all on him. And I agreed with him. And I said, okay, no carried interest at all. I'll put up 10% of the capital, which is all of the money I had, or at least all of my liquid assets. I want 50% of the profits and I'll absorb 50% of the losses. So I was negotiating for a much larger share of the upside in exchange for taking an extraordinary amount of risk. And it was a completely rational calculation in terms of risk and reward, but very few people would have done it.
When you say rational, like, and you talk about this a lot in terms of Stoicism, that, Stoicism favors rational thinking as opposed to overly emotional thinking. And again, in this case, the emotional thinking might be that 1% chance that you get wiped out, and so you can't do it. Whereas rational thinking looks at, okay, what are all the probabilities of the different scenarios that could happen, and what's the expected value of this? Much like playing a poker hand. But were you thinking in terms of Stoicism at this point? Like, what was your... Obviously, you wanted to break free from the shackles of even a high-paying job on Wall Street, and you wanted to do something that was your own. And offering this risk convinced Joe Mailman that you were the sort of person he wanted to partner with. What else went into your thinking?
Well, I had grown up in a family with a great deal of financial insecurity. I mean, to the point that my parents were worried about paying gas bill, paying the electric bill, paying the phone bill. And I really didn't have role models at home. So I became a voracious reader of biographies. And, they don't write biographies about mid-level partners at Oppenheimer. They write biographies about J.P. Morgan. So, my sense of what I might do with my life was really framed more by these biographies of great men, not only in finance, but in public service, generals, presidents, scholars, intellectuals, scientists, people in history, people in Europe, people in Asia. But I was a voracious reader of biography, and that was what gave me this sort of somewhat grandiose sense of what my possibilities might be in life or my goals might be in life. And they were very ambitious, but they served me in good stead.
Yeah, and how old were you when you made this decision with Joe?
Let's see, I was 35.
35. So you were already, like, let's say, midway through a career in most people's, the way most people judge it, and you're taking this huge risk. But like you said, your worst case is you could go back to a similar type of job. Perhaps you had some liquid assets that may or may not result in cash, but you felt they would, but you really wanted to go out on your own. And I think a lot of people are afraid to make a decision like that, where I feel there's a huge benefit to going on your own and doing your own thing. Do you think everybody should do that, or do you think some people are not really meant for that?
Well, I mean, I can't presume to talk for everybody. I'd say that it does require, and this was again a quality that I sort of had we talked about the obstacle being the way. So the obstacle in my case was really very difficult financial circumstances at home. And the way was a sense of complete self-reliance, of taking full responsibility for my own life at a really early age. And that was a key success factor for me. But I think that is a universally useful thing. I mean, to take full responsibility for your own life is very, very empowering. And it doesn't necessarily mean that you have to be the head of a dragon as opposed to, or the head of a chicken, as the Chinese say, rather than the tail of a dragon. If you find something to do in life that you find satisfying, that calls forth all of your abilities, that encourages you to use your full energies to a fruitful purpose, that's enough for a well-lived life for most people. And whether you take the risks or the responsibilities of, quote, going out on your own, it's really a very much an individual choice.
Take a quick break. If you like this episode, I'd really, really appreciate it. It means so much to me. Please share it with your friends and subscribe to the podcast. email me at altucher@gmail.com and tell me why you subscribed. Thanks. Going online without ExpressVPN is like having sex without a condom. Most of the time, you might be fine, but the repercussions could be huge. I mean, every time you connect to an unencrypted network in a cafe, hotel, an airport, your online data is not secure, and any hacker on the same network can gain access and steal your personal data, which like passwords, bank logins, credit card. I'm paranoid about this all the time, which is why it's so important to use a VPN like ExpressVPN. Look, your data is valuable. Hackers can make up to $1,000 per person selling personal info on the dark web. And ExpressVPN stops hackers from stealing your data by creating a secure, encrypted tunnel between your device and the internet. First off, ExpressVPN is super secure. It would take a hacker with a supercomputer over 1 billion years to get past ExpressVPN's encryption. It's easy to use. You just fire up the app and click one button and you get protected. Rated #1 by top tech reviewers like CNET and The Verge. Whenever I go to an airport or like if I'm at a cafe with my computer or whatever, I flip the switch, turn on ExpressVPN to protect myself. It is so important for me to protect my personal data. It should be personally important to you as well. So secure your online data today by visiting expressvpn.com/Altucher, Altucher. That's expressvpn.com/Altucher to find out how you can get up to 4 extra months free. expressvpn.com/Altucher.
Rakuten is the smartest way to save money when you shop because you earn cash back at over 3,500 stores. Fashion, beauty, electronics, home essentials, travel, dining, concert tickets, and more. Your favorite stores like Lowe's, Levi's, and Nike pay Rakuten to send them shoppers. And Rakuten then passes on a part of that payment to its members as cash back. You're already shopping at your favorite stores. Why not save while you're doing it? It's a no-brainer. Membership is free and easy to sign up. Get the Rakuten app now and join the 17 million members who are already saving. Cashback rates change daily. See Rakuten.com for details. That's Rakuten. Your cashback really adds up.
Your child has so much potential, but your local schools may not be right for them. Check out K-12. K-12-powered schools are accredited tuition-free online public schools for students in kindergarten through 12th grade. This is not your typical homeschooling. With state-certified teachers specially trained to teach online, your child will learn at their speed, at home, with innovative, engaging technology. Join the more than 3 million families who have chosen K-12. Go to k12.com/podcast today to learn more. That's k12.com/podcast.
You know, a lot of people will say, okay, he could write the Stoic Capitalist because he's made it, he succeeded. It's easy for him to say now. But these were issues. You were taking these risks and going through these challenges early on in your career, like that first deal. You know, if your first deal goes bad and you have all these investors, it's not like you could do the next deal 3 days later. It's going to take a while to rebuild find a new deal and make it work. And it takes years for a deal to turn out to be successful. So I think a lot of what you talk about is how these emotions are running through your head, but they're not really useful to solving the problem. And you sort of have to recognize, I think the hard part of following Stoicism is you have to recognize which thoughts are not useful. Like, how do you put that into practice?
Well, I have to say I was a natural born Stoic. This was just my natural way of thinking. My mother was sort of out of control emotionally, so it gave me a kind of an innate distrust of emotion. I felt like I needed to take responsibility for my own life. I had to find my own role models, which I did in reading these biographies. So, and also I was sort of burdened with bad ideas at home. I mean, my mother was a communist, and she would be talking a lot about Marxist ideology at home, and just didn't make much sense to me. But that, the burden of bad ideas became the way of critical thinking, which I had as a kid. I mean, just this Marxist stuff didn't sound right. from each according to his ability, to each according to his needs. I mean, like, I'm a bright, hardworking kid. You should take some of my grade points and give them to dumb kids who don't work. I mean, what sense does that make? So, yeah, again, the obstacle being the way was sort of ingrained in me from the very early stage, and the privileging of rationality, and the sense also that that academic success was going to be my way out of the situation at home that I absolutely did not want to replicate in my own life.
Now, I would say a lot of what you've got from Stoicism is to always question assumptions, question your emotions, like question if you think, oh, the worst case scenario could happen. Is this asking yourself, is this really true? I think you sort of indirectly you steel man a lot of the assumptions that society makes and that you even personally make. Would you say that's kind of a somewhat of a correct assessment about how you view Stoicism?
Yeah, absolutely. I mean, the Stoic idea of an evolved person is you don't absorb your beliefs by sort of osmosis from people around you or from the society or from, prevailing wisdom. You really kind of subject anything that anybody tells you to rational scrutiny or to some sort of skeptical idea. I mean, I remember early on, I write about the Rockefeller and Carnegie biographies in the book. And I remember in high school, these guys were called robber barons. Maybe they still are. But I was thinking, what are you talking about, robber barons? These were great industrialists. They built the great industries of America, and they established this incredible American tradition of major philanthropy. And I mean, what's wrong with those guys? I mean, why are they quote robber barons? To me, they were heroes. So that habit of thinking independently is really, I think, central idea. And it's also a very important idea in investing. I mean, you can go along with the crowd most of the time and it'll mostly be okay. But almost by definition, the crowd is wrong at key turning points. What makes market tops is everybody is bullish. What makes market bottoms is everybody is bearish. So those key turning points, you more or less have to be a contrarian to succeed.
Yeah, like I mean, you think about the pandemic in March 2020, the economy was shutting down. The world, everybody thought everybody was going to die from this disease. Uh, and yet that probably was the best time in recent years to be bullish. How would you have worked? I mean, what did you do during that situation? Were you putting money to work or how were you thinking during that time?
Well, I actually had I mean, I was thinking pretty analytically, actually. I had an article, an op-ed in the Wall Street Journal just on this topic about how to think about the risks of COVID. And turns out if you really did the analysis, COVID, nobody was dying from COVID. People were dying with COVID. It had to be a comorbidity with other things. So New York was an epicenter. And I was not much of a believer in the statistics around COVID deaths. I was more looking at the total number of deaths relative to what would be expected. And if you looked at it through that lens, you would see that for younger people, I mean, it was trivial. I mean, your chance of dying from COVID if you were 40 or 50 years old or 30 were trivial because your chance of dying from anything at those ages are pretty trivial. But if you're 70 or 80 and you're living in New York, it really made a huge difference in your chance of dying from any cause. So, again, the statistical analysis kind of gave me a sense of what the real risks of COVID were. I wouldn't say it led directly to investment choices. I mean, I think the more significant event was really the great financial crisis, where you saw that the government was going to do absolutely anything it took to preserve the financial system. And if that meant zero interest rates, it meant huge amount of money supply. I mean, there you really had a set of government interventions that were setting up the basis of an absolutely long-term stock market boom.
I love this idea also of asking yourself the question, is my life such that someone could write a biography of me? That's such an interesting question to ask because obviously for most people, the answer is no. Then they could decide whether or not to make adjustments. But that's an interesting use of biographies, is to read a lot of biographies, model what the person is like in the average biography, and then ask that question. And then the other thing is, you did seem to pull lots of lessons from each biography. Like the Rockefeller one, you in the book, you kind of explain Rockefeller's negotiation techniques and why he was so successful. And you really took stuff out of these biographies you read as a kid that you were able to apply later in life, which I also think is pretty rare.
I was absolutely reading them as how to do it manuals for a successful life. I mean, I was reading them actively, asking exactly those kind of questions. What was this guy doing? What kind of decisions was he making? How was he dealing with obstacles once he became powerful and wealthy or famous or whatever? How did he deal with his family? How did he deal with public service? How did he deal with philanthropy, et cetera? And that was absolutely the way I was reading them.
Once now you started your own firm and it started to grow, like how did things, first off, I want to ask you again about the starting of the firm. Your wife was very supportive. Your wife, Peggy, was very supportive of you putting all of your money at risk, which I think also is an unusual situation. If she had been against it, what do you think would have happened?
I don't know. I mean, it's hard to play what-if games. I do give her a lot of credit in the book, and she was she actually liked the frugality. She liked the fact that we were living a relatively frugal lifestyle, and that was helping me in my ambition. So, I just want to give her a lot of credit, as I do in the book, for being that way, and also for trusting my judgment when it came to career choices and financial choices like that.
Like she had faith in you. And that was different than the scenario you described with your mom and dad.
Yeah, exactly.
How important you think is the choice of a spouse in career?
Well, I think it's it's a very important thing in life in general. But if you're going to pursue an ambitious career, whether it involves financial risk or at the early stages, an all-in commitment of time, energy, and focus, if your spouse is not a supporter of that, I think it is a real problem. I mean, I think it's one of the things that you'd want to get right in a marriage, is being sure that whoever you're with is supportive of what it takes for you to succeed in the things that are important to you.
Yeah, I agree, and I think that's not so easy to find. Guys, you've probably heard of Viagra or Cialis. Maybe you've even tried them. No judgment here from me. But if you're looking for something beyond the usual pill, meet Rugiet Ready. And Rugiet is spelled R-U-G, like rug, and I-E-T. Other companies rely on similar ingredients to support blood flow, but Rugiet Ready is a next-gen prescription treatment designed to help amplify arousal in the brain and increase blood flow. So it makes you excited in the brain, and it increases the blood flow where it's important. And if the usual pills still aren't doing the trick, Rugiet Ready could be the answer. It's a 3-in-1 formula, dissolves under your tongue to absorb fast, so you'll be ready in just 15 minutes on average, not hours, and effects can last up to 36 hours. That means you can stay confident, present, and in control when the moment's right. And if you want proof, Over 150,000 men have made the switch, and you could read their customer reviews right on the site. Getting started is simple. Rougiet connects you with a board-certified doctor 100% online, and if prescribed, your treatment ships quickly to your door. Connect with your provider at rougiet.com/James. You got to use my special code. Rougiet and I have worked out a deal. So rougiet.com, that's RUGIET.com/James, to see if a Rougiet-ready prescription is right for you. Just use code James to get 15% off. That's RUGIET.com/James and use promo code James to get 15% off today. Head to rougiet.com/James and use code James to get 15% off today. So if you use the code, you support the show, and it shows Rougiet that we sent you there. Now, individual results may vary with prescription treatment. Compounded drugs are permitted to be prescribed under federal law, but are not FDA approved and do not undergo FDA safety, effectiveness, or manufacturing review. Please visit the Rougiet website for full safety information. You've had a lot of different experiences in your career. And what's interesting about Stoicism is it applies to everyone. So one of the most famous Stoics, Epictetus, was a slave. Another obviously famous Stoic philosopher was Marcus Aurelius, who was an emperor. So it really applies to the full spectrum of society. But I've never seen it linked to cognitive behavioral therapy. I mean, can you describe what cognitive behavioral therapy is?
Sure. And there's a citation in the book to a pretty scholarly tome written by Donald Robertson. He's the author of How to Think Like a Roman Emperor, which is a kind of a popularization of the intersection of cognitive behavioral theory, Stoicism, and self-improvement. And it's a really good book. But there's a much more scholarly one that looks at the real intellectual history here. Cognitive behavioral therapy is simply saying that cognitive distortions are a driver of decisions that will not work out very well for you. So it's very practically oriented in the same way that Stoicism is. It's sort of asking you to examine cognitive views that may be distorted. Catastrophizing is one of them. Framing is another, where you look at, let's say, a person or a situation with a kind of a frame, meaning a preconceived notion or a conceived notion of who they are or what the situation is. And, there's always going to be a ton of evidence that supports that frame. But there's also going to be a ton of evidence that might go the other way, or a ton of evidence that's ambivalent that you can interpret one way or another. And cognitive behavioral therapy cautions you against framing. It cautions you against catastrophizing. And it really asks you to examine the beliefs that are causing you trouble or causing you to make decisions that are just not working out very well for you. So I'd say it's very well aligned with Stoicism.
I feel though, like being able to question your assumptions and like for instance, you could get addicted to catastrophizing. Like in every situation, you could think, oh no, here we go again. The worst thing's going to happen. I'm going to go broke, or I'm going to do this or that. She's leaving me or whatever. Like this type of catastrophizing is almost like an addiction. And it feels like it takes a mental sort of muscle to not do that. Like, how do you practice? It's easy to say, okay, this is what you need to do. Stop catastrophizing. But how do you practice that muscle that really pulls you out of this death spiral of catastrophizing or whatever it is you have assumptions about?
Well, I think cognitive behavioral therapy is really, I think, a great form of intervention because it's really short, it's quick. I mean, you can have 6 or 8 sessions with a professional in that field and really make a difference in the way you are thinking about a situation that's really troubling you. I mean, a recent example is somebody who works with me who had sort of a very small chance of a malignant cancer, but turned out to be not malignant and kind of okay. But the degree of obsession that he had over this undesired outcome was just so great that it almost made it impossible for him to think about anything else. And, I think that's the sort of thing where you talk to somebody who's a professional about it for 6 or 8 sessions, and you can maybe come up with a much better way of coping with an unlikely and undesired outcome, and to realize that all the fear, all the worry, all the anxiety that you're experiencing isn't doing any good anyway. If you have the bad outcome, you'll deal with it then. But to imagine it and have it poison your life now just is not a very functional choice. But that's something that I think an effective therapist can get across in, as I say, a half a dozen sessions. It doesn't require a lifetime of examining what you experienced as you had as a kid, or different traumas that might have made you who you are along the way. It's pretty straightforward. It's pretty pragmatic.
And I would say, obviously, half your book is about Stoicism, and the other half kind of shows how Stoicism interweaves through the various financial decisions you made. But I would almost call the financial side of your book a textbook on arbitrage, because you talk about so many different arbitrage situations whether it's kind of arbitrages on interest rates, arbitrages on capital structure, and I don't mean to get too much into the weeds. And it's kind of helped you, always look for these arbitrages, whatever's going on in the financial markets. Like right now, if someone's young and looking at what big financial trends to sort of get involved in, or technologies or whatever, what would you look at? What would you encourage people to look at?
Well, I would say that for most of my life, the big rewards were to finance capitalism. And today, the big rewards, I think, are to technology. And I think that's a good thing for society. I think the great advances in technology are actually adding more value to the society than the leveraged buyout business, for example, or the hedge fund business in which people have made fortunes. I think probably the most important technological development of our time, or at least of recent times, is artificial intelligence. I'm sort of a resolutely techno-optimist type, and I really feel like this is one of the great productivity enhancers that I've seen in my lifetime. It's like we're all going to have a couple of PhD level personal assistants doing every conceivable thing, and I think the outlook for productivity and increases in science and law and practically any field are huge, and we've yet to even tap the beginning of them. And the systems are improving so rapidly. I mean, 6 months ago versus now, there are dramatic changes. So to me, this is like incredibly important. But if you look at the discourse around it, pretty much dominated by fear.
Yes.
People are going to lose their jobs, fear that the machines will take over, fear that we'll build things that we can't control, fear that we'll make regulatory mistakes and China won't, fear that we won't regulate it enough and these companies will somehow exploit us. I don't know. I mean, it's the narrative is all around fear and downside, whereas to me, it's an area of just incredible potential contribution to human flourishing.
I agree with you, but sometimes I struggle with answering the people who have these fears. Like, for instance, on the job front, you can always say, well, look, all the typists lost their jobs when typewriters were replaced by computers, which increased productivity quite a bit. Or all the people who rode horse carriages lost their jobs when people started driving cars. Like, in almost every decade of the past century, there was the same argument. But the AI people say now, okay, but now they're going to be replaced by robots. Like the horse people ended up driving cars. The typists ended up using computers. But people now say there's no, the people being replaced by AI, like for instance, a designer, a logo designer, AI could do it better. Those people there's no other job for them. Those industries are just going to go away. Like, what would you say to that?
Well, I think, it's Stoic wisdom to expect change, to accept impermanence, and to try to figure out how you can be on the leading edge of change or at least adapt to change. But I would say it really is. I mean, these are legitimate social problems and they're not new. The globalization created a lot of issues for people. I mean, 50 years ago, if you were bending metal for a living in Detroit, you were doing pretty damn well. Today, forget it. I mean, you're competing with people who are bending metal in factories in other parts of the world, getting a fifth of what you're getting. And, it's created a lot of despair and economic dynamism, which, I think is a great thing, but it doesn't benefit everybody equally. And society has not so far shown a real a substantively useful way of dealing with people whose jobs have become kind of obsolete. I could imagine thousands of people or millions of people actually who drive for a living, drive cars or drive taxis, drive trucks, being replaced or needing to retrain. People who interpret medical history, people who, I think most work in law firms, a lot of it could be done through AI. So I agree. I think it's going to create a lot of pressures on people to adapt to a different world. And we have not been very successful at figuring out how to help them do that.
I mean, with the AI, one thing I think about is always think of the AI as a tool rather than a master. So if you could think about how to do what you currently do using AI as an assistant, think of AI as an assistant, then I think for many jobs that might help people. There's an arbitrage right now where, let's say, only 10% of society uses AI on a regular basis. So if you're using the AI, you could have a significant benefit in any sort of competition against the people not using AI. We're at an opportunity right now from that.
Yeah, that's absolutely right. And I've tried. I'm not a great expert, but I know the strengths, the weaknesses of Claude and of ChatGPT and of Perplexity and of Gemini. I think of it as a huge enhancer to my own productivity.
When was the last time you used AI? Like, what did you use AI for today?
Well, I think the last thing I did was I actually announced a venue for called Canyon, which is a venue for video art that I'm opening in New York on the Lower East Side. And I did an AI search of display technologies and like suppliers of video walls, basically. And within 5 minutes, I had a list of all of the manufacturers in China, which ones had U.S. Engineering support, representative pricing, quality of things in terms of their fineness of resolution and refresh rates and so forth. I mean, all the stuff that you would need to trick out a state-of-the-art venue for displaying video art. It took 10 minutes. I mean, if you hired somebody and they did that report in a month, you'd be pleased.
Yeah, I find this to be utterly amazing, and I'm learning every day new things AI can do. I think if you love cars, you love the Defender. We have Defender, And my wife, she's had a Defender in one version or other since she was 18 years old, since she started driving. And our kids even learned how to drive on a Defender. They learned how to drive on the desert in Kuwait because not only is Defender, of course, great highway driving, but you could drive it. It's great for off-roading. You could drive it on the desert. And that was the place where my kids learned how to drive a car. That's why the Defender is a vehicle that's basically adapted for the city, but also for beyond. The Defender 90 is the original two-door Defender body design. It's a smaller silhouette, but fits for journeys of all size. There's 3D surround cameras with clear sight ground view, so it lets you see underneath the vehicle and anticipate obstacles and rough terrain. Again, for the urban city and beyond. There's a next-gen Pivi Pro infotainment system, which of course is great for 3 kids driving in the back seat, and intuitive driver displays that are customizable to your journey. Explore the Defender 90 at LandRoverUSA.com. Shifting a little bit, obviously, you've seen the U.S. economy in all its forms, up and down. You've been involved in investing forever. The state of the U.S. economy now, people always say this time it's different. It never is, but the U.S. obviously is $37 trillion in debt. People are wondering if the dollar is going to remain a reserve currency. Where do you see the U.S. economy going?
Well, I mean, I think the worries that you express are quite real. I mean, debt is a much more significant part of the picture than it has been historically. Interest on the debt is a much higher percentage of GNP. So we're pursuing some policies, or I don't know if we're pursuing them, but certainly if we blow up the global trading system and we really take these tariff proposals and implement them to the extreme that some people are advocating, that could be really, really bad. I mean, we could have a period of stagflation with relatively high inflation from the closing off of the U.S. to the world economy and relatively stagnant growth. I mean, there was a period we went through in the 1970s. It was pretty terrible. And it would be worse now because interest on the national debt is so much more critical than it was then. I don't really trade very much from my own account, but the last big trade I put on was effectively a short on U.S. long bonds, because I did feel that there was a risk that we were going to have long-term inflation in this country and higher interest rates that the markets weren't really taking into account.
And did you think that we were going to have inflation because essentially that would be the way for the U.S. to pay down its debt, is by weakening the value of that debt through inflation?
Well, you had a lot going on. I mean, politicians don't like to impose taxes, and they don't like to constrain themselves on spending. So what does that leave? Leaves inflation to bring things into balance. But the other thing is, that tariffs, I'd say, are very inflationary and obstacles to global supply chain, and particularly if they're applied in a kind of chaotic fashion. That could drive the cost increases. So you have those two big pro-inflation factors. Going the other way might be AI, might be some productivity enhancements, but to me, the risks of a kind of a high inflation, high interest rate scenario seem more real in what the market seemed to be thinking.
This tariffs thing is very complicated, obviously, and it's sort of like the thing you ask 5 economists, you'll get 27 different opinions on it. I'm just trying to understand, when you had Smoot-Hawley, for instance, in 1930, which was a across-the-board tariff that many people believe caused the Depression, ultimately that resulted in deflation. I mean, there was a lot of things that resulted in the deflation of the Depression, but that kicked it off. It seemed the tariffs were deflationary because people would just stop spending money. Or in 2018, with the steel and aluminum tariffs that Trump put on in his first administration, inflation never really got bigger than 2%. So what makes this time different in terms of inflation with the tariffs?
Well, I'm not saying that the tariffs by themselves would drive inflation, but the combination of the tariffs with 6% GNP, 7% GNP deficits at a time in the economy where you would ideally expect to see 2-3% deficits, or maybe even not. That combination is the thing that I think is potentially deadly. That said, I mean, the U.S. economy is still the most innovative. Much easier in this country to raise capital for companies with ambitious or interesting plans. I mean, it's hard for me to think of another. U.S. stocks are pretty fully priced. Fundamentally, there are only two kinds of financial assets. There are stocks and bonds. I think I'd rather own stocks.
Well, I guess that's an interesting question too, because I feel like a lot more things are becoming financial assets now. So for instance, BlackRock is, creating methods for fractionalizing real estate ownership, through crypto tokenization, or there's also fractionalizing cash flows from royalty streams from musicians and so on. I feel like the world is going to expand the number of financial assets one can invest in.
But fundamentally, what are they? I mean, it's just a different way of packaging up. I mean, either they're kind of a debt-like claim or they're an equity-like claim. And, a lot of this, I would regard the whole private equity area as just private equity is equity. It's maybe equity with less transparency on marks. It's maybe equity with higher fees. It's maybe equity with controlling shareholders adding more value. I don't know, but it's equity.
Yeah.
And these things that you're talking about are debt. I mean, they're the first claims on some stream of income. There's nothing very magic about any of that.
Yeah. So the financial world, well, and it's interesting because one of your early businesses, you ran a fund of hedge funds, one of the first ones out there, and you discussed your strategies for picking good strategies, like good funds with good strategies. And one thing you said that was very interesting to me was how if they've made their money on a single strategy, you have to question whether they were lucky or not. Like, did they make their returns during a period where that single strategy worked? If they started in 2021 and invested in just crypto, obviously they would have worked. But if they started in 2022, they would not have worked. And I wonder if that applies to someone like Warren Buffett, like where he started investing during a time where value investing was very successful. Would you consider him lucky, or is there more depth to it?
Well, I would say, the chapters in the book that deal with this really are trying to address a more fundamental conundrum, which is past performance, according to the SEC, is not a good predictor of future results. And the SEC is exactly right. But why? Almost every other field, if you're a good basketball player today, you're going to be good tomorrow. If you're a good violinist today, you're going to be good tomorrow. Why is investing this field in which past performance is not a good predictor? And I think one of the challenges, which you just talked about, is sort of figuring out luck versus skill. I would put Warren Buffett in the skill camp because he's made a lot of individual decisions about different kinds of companies, and they mostly turned out to be right. But I also caution, there's another chapter in the book called Behold the Earthlings, which says observe the behavior of market participants and try to look at their behavior with almost the mindset of the man from Mars. So the idea that, quote, value investing is a driver of stock market performance, well, maybe not. And if you have some, a huge trend toward indexation, which started in the 1970s, indexation is the opposite, really, of value investing. It's really saying the higher the price of the stock, the bigger a share of the index, and the more of it people are going to want to buy. So, I would say to be a successful investor, you don't want to. You want to really look at the behavior of market participants. Try to look at it without any preconceptions. Be particularly sensitive to changes in patterns of behavior that are likely to play out over a long period of time. And in selecting strategies, the luck from skill is one. Another is the track records are not all created equal. I mean, a lot of track records are just manager marks, which are a lot less persuasive than what the stock, real active markets price positions at. You're basically taking the manager's word for what his track record has been. So that's right away suspect. There are some strategies that work very well on a small amount of money, but are just not very scalable. I mean, that's another reason why past performance might not be much of a guide. Or some strategies that will work for long periods of time, but the fact that they're working makes them less attractive. So take something like junk bond-oriented strategies. They may work for a long period of time, but at the end of a long period of time, bond prices are high, the margins over safer credits are low, the amount of legal protections for investors has been kind of eroded over time, and it's not going to be a happy time to invest. But if the past performance looks horrible, that could be a great time because the bonds are selling at 60, 70 cents on the dollar. And any new issues are going to have much greater protections. And, so there's a classic example of an investing strategy where being a contrarian is going to lead to much, much better decisions than looking in the rearview mirror at the performance.
And I feel like Stoicism has helped you kind of take this kind of approach to the markets where not that Stoicism is contrarian by nature, but the fact that it does force you to question all the assumptions. And not that you're going to be disagreeable either to every single situation, but, are these companies going bankrupt, or is this strategy great or bad right now? Like what's really behind this? So it seems like there's a combination of questioning assumptions, reading an enormous amount from various viewpoints to get an overall picture, and also accepting the fact that things change, that situations change, that something doesn't necessarily always work forever. And I think also in there's a spark of independence, always figuring out what's an independent or unique viewpoint on what's happening. I think these sort of prongs form the basis of your approach to Stoicism.
I couldn't say it better myself. It's exactly right.
And it's impressive. Again, you've had a vast career, but it's really been not one finance career. You've been involved in lots of different things, from managing money to helping companies to philanthropy to all of your different work. And again, I've learned a lot from your book, The Stoic Capitalist. I saw myself in a lot of the bad examples, which is, sometimes I catastrophize too easily. And it is hard to get out of those mindsets. And yet the times when I've been successful is when I sort of ride with the difficulties. And I always try to take the viewpoint that a difficulty, if you lean into it, could turn into an opportunity. And that's been a very useful thing for my career. And it sounds like for you as well.
Yeah, absolutely. I mean, that saying that the obstacle is the way is really true. I mean, the obstacle can be at least a stimulus to creative thinking. It can be an exploration of your own resilience as a person. It can be a catalyst for learning new skills or bringing different mindset to bear. And if you think of obstacles as learning opportunities, That's a hell of a lot more constructive than thinking of them as, I'm frustrated.
Yeah, it's so easy to slip into a pattern like, oh, this is happening again. Or why does this always happen to me? Thinking that something is part of you, particularly when it's something you have no, like when you describe the company that made record covers, there's some things that are just out of your control. Who knew the Sony Walkman was coming and would wipe out the record cover business? And you have to kind of be able to roll with the punches a little bit, although it's difficult. I'm just curious, does Stoicism say anything about how to find purpose in one's life? Some philosophies do, some philosophies don't.
Well, I would say a big part of Stoicism, and one of the sort of 7 aphorisms that I have sort of extracted and write about in the book, is act for the benefit of society. And that strikes me as a central ingredient of a well-lived life. It was certainly part of Marcus Aurelius's thought and his meditations, and he views it as the one thing that everybody would kind of agree on as a good value. Now, so I would say acting for the benefit of society is a critical value element here. It doesn't necessarily mean being philanthropic. I mean, I think somebody who builds a major business is acting for the benefit of society. A successful business is frequently based on some great technological innovation or a better way of using scarce resources or creating a better environment in which your employees can flourish or creating a better solution for your customers. You're adding to society and building most successful businesses. So it doesn't, acting for the benefit of society doesn't necessarily mean giving back, like you've taken something away by building a successful business. But I think in the course of doing that, you are acting for the benefit of society, unless you're doing something, unless the business itself is operating in a way that is kind of problematic in terms of its social input and import. And I'd regard some of the social media companies, for example, as companies where you could have real debate whether Facebook or the like is really contributing in a positive way to society or not. But that's why we have open to debate.
Well, and that's a good point, because when Facebook started, this was like I felt like this was the greatest thing that ever happened to me in my life. Like, I was never going to, in my whole life, keep in touch with my friends from the first grade or the second grade. But now, kind of casually through Facebook, I can see, oh, my friend from first grade who I haven't spoken to since then, I see his kid won a soccer match last night. Like, it makes me happy, like to kind of almost in a very small thread, keep in touch with people I would never normally keep in touch with. I would have no reason to call these people from my past, but I like that I can keep up to date with all these people I've known through the decades. That was a great thing about Facebook for me then. And I do believe that message or mission has been distorted a little bit, but ultimately I feel like social media is a good thing. But I agree too. Some of the conversations could get you down a rabbit hole, and it's ugly to see what are in those rabbit holes.
Well, the thing that bothers me most is the effect on political discourse. Some people who are getting the news on social media, which includes most younger people, are getting news that is filtered to their interests, which means that they're getting opinion that reinforces their existing opinion. It means they're getting facts that support those opinions. Inconvenient facts never wind up in your feed. Contrary opinions never wind up in your feed. So you've got a degree of polarization in the society where, our political culture is really at risk. And to me, that is the big negative from what I think is an innovation these social media platforms are. I would have said exactly what you said, that they made it so much easier to create communities of common interest. Isn't that a great thing? And it was, but it had unintended consequences, particularly in the nature, in the field of political culture, that I think are pretty harmful. So I think it's a real debate. God knows we've had one at open to debate many, many times on just this issue.
And it almost makes me think a good title for a book would be Unintended Consequences. Like all these things that started with, good, well-meaning philosophies that have unintentional negative consequences, and are those negative consequences bigger than the initial positive consequences? Like you mentioned in the book by this guy who I thought had a great name, Myron Magnet, I think his name was. And
Yes, yes, exactly.
he talked about exactly this in a financial or government context, but there's so many different examples, like even Facebook from private industry where there's unintended consequences. And it seems like having a book that's sort of a textbook on all these different unintended consequences might help people exercise that contrarian muscle a little bit.
Well, that might be my second book.
You go for it.
There is a chapter in Stoic Capitalist that kind of explains, at least my thinking about how the political culture got as dysfunctional as it is, and a lot of them are exactly based on unintended consequences. So when I was a young man, political candidates were selected in smoke-filled rooms, and those rooms were populated by professional politicians, and they would pick people that they knew to run for offices, and generally they would pick people who were reasonably well qualified. So that became, that's the way the world worked, but it wasn't very democratic and it wasn't very transparent. And that has gotten substituted with direct primaries, which seem on the face of it to be more democratic and more transparent. But the combination of direct primaries, where basically the most liberal Democrats and the most conservative Republicans are the people who show up to vote, and then if you combine that with gerrymandering, where 90% of congressional districts are safe Republican or safe Democrat, you've really disenfranchised the entire political center. The Democrats are very far to the left, so you have possibly a socialist candidate for mayor who believes in defunding the police and some sort of global intifada. It's really created extreme outcomes that were completely unintended results. And the book talks about 4 or 5 other examples of that. The things seemed well intended, but produced unintended consequences. So maybe you have given me an idea for my next book.
You go for it. I'll read it. I'll be the first reader. I'll test read it for you when you're still writing it. So you can count on me for that. One final question I always ask anybody who went to a top Ivy League school in the 50s or early 60s, which is, how much time did you work for the CIA?
Well, I did not work for the CIA ever, but one of the more influential courses I took was taught by a former station chief in Cambodia. And it was very influential, actually. His name was Holt Bradford Westerfield, great CIA name.
Yeah.
And he'd invite Alan Dulles to our seminars who would be recruiting people. I never got recruited, but my class roommate was. So, yeah, I think that CIA presence at Yale certainly was there, absolutely. But also just the idea of public service. Yale really did value that very, very highly. And when I was at Yale, some of the top professors were in government. Jack Kennedy was president. He was hiring people from top university faculties to a degree that was pretty unusual at the time. So, I think the elite universities in my day did, I'd say, honor public service in a very constructive way. And they also, I think, to a greater degree than is true today, encouraged intellectual diversity, viewpoint diversity. And you could have real debates on campus on damn near anything, and it was okay. And I think one of the challenges we have today is that elite universities have, to some degree, certainly in the humanities departments, become kind of intellectual monocultures that are teaching, more telling kids what to think than teaching them how to think.
I 100% agree, having just sent a bunch of kids through college, and that was definitely true. So look, Robert Rosenkranz, very successful all through your career, but also author of The Stoic Capitalist, Advice for the Exceptionally Ambitious. I really think this is great advice, and you show it's not just advice that you've come to at the end of such a successful career, but that all throughout how you applied these ideas and way of thinking to your own success and sometimes failures, how you bounce back from them. Such a valuable book to read. It was a page turner for me. I highly encourage people to read it. And thank you so much for coming on the podcast and answering my questions. I've learned a lot.
Well, it was a pleasure to be a guest, and I thank you for your very generous appraisal of the book.
This summer, Pluto TV is exploding with thousands of free movies. Summer of Cinema is here. Feel the explosive action all summer long with movies like Gladiator, Mission Impossible, Beverly Hills Cop, Good Burger, and Transformers: Dark of the Moon. Bring the action with you and stream for free from all your favorite devices. Pluto TV. Stream now. Pay never.